This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Coveil. Not filtered, raw, honest. That's my passion. So today on the show, I have Jim Rohrbach, and Jim and I have known each other for a few years, and Jim is, I think, I've always think of there's like kind of running in parallel. You have those folks that call themselves trend followers, and then, you know, folks that call themselves market timers, but the reality is, they're kind of the same thing. Anyways, Jim has long called himself a market timer, and he was kind enough many years ago, actually it wasn't that many years ago, that he appeared in my film, Broke the New American Dream, and had some classic one-liners in there. And so anyways, I think we're having a fun conversation today. Jim has got a little bit of experience on us. I think did you just turn 33, Jim? How old are you?
I think I hit 81, but I'm not sure. My memory's slipping.
Yeah, I don't think it's really slipping, but so let me jump right in. You said, hold on, did you say 81 or 83?
81.
81. So you've got a little bit more experience at this game than some of us. And so when did you get started, Jim?
Well, I've been doing this for 40 years. And the sad thing is I can't look forward to doing it for 40 more.
Why?
Well, I don't know. That would make me 121.
Yeah, they're gonna fix these aging problems soon, Jim. I'm convinced.
But I'm having a good time. People say, do you work? And I say, no, I don't. I just do what I love to do, which is time the market. Now, I started back in 1964. It's interesting. I was working for a telephone company, or I think it was AT&T, New England Telephone Company. And one day while I was in the office, I turned around and I saw a young man doing something at his desk. So I went back and I said, what are you doing there? And he said, I'm posting a chart. I said, what do you mean a chart? He says, well, every day I post the price of the chart, on the chart of the stock that I own, so I can see a picture of it. And over time, you can see patterns developed. You can't remember those patterns, but if you put them on paper, you can see things. I said, geez, that's fascinating. He said, I have a book on charting. Would you like to borrow it? I said, yes, I would. People keep asking me what that book was, but I can't remember. Anyway, I borrowed the book, and I went home, and I picked up the book, but I couldn't put down the subject. I was so fascinated by this technical analysis stuff. And I said to myself, geez, there's a possibility of making some money here trading stocks if you learn how to do it. But I said, the one thing I have to learn first is what is the trend of the stock market? How can I identify when the market changes direction? I said, if I can do that, then I have an advantage. And so I worked on that mathematically for a long time.
Well, but Jim, before you get into that, I gotta bring you back a little bit because people they want to know more about you. Like, you know, what's the background? Where'd you start? What's your training, Jim? How, you know, before you started to have this love affair with technical analysis, what were you doing?
Well, I worked for the telephone company. I graduated from Lehigh University in '59. I think I was pretty high up there on the scale. I got 2 National Honor Society mentions. And then I went to work for the telephone company.
What were you studying in school, Jim?
I studied marketing.
Okay.
And I haven't done any marketing since. And a good friend of mine in school was Roger Penske. You may have heard of him. And he and I were in the same classes. And he also majored in marketing, but he was a little bit more successful, I would say. But anyway, I went with the telephone company not knowing why. And they wanted me to go to New England. And I had been up there when I was in the Navy in an aircraft carrier. So I said, yeah, that sounds okay. I'll go to New England. So I spent how many years did I spend with them? 84 I quit. So I started in 59.
A few.
It was not me. okay? I was a manager and I was an executive over a large group of people. But it was not me. I didn't know it wasn't me until I quit in 1984 and spent my full time playing around and doing what I do now.
Well, let me bring you back then, because I know you were starting to go to a certain area. I just want to kind of let people feel a little bit about, you know, where you had been and how you had come to this idea of technical analysis and starting to play with the idea of trend and trend change and trend direction. So yes. Maybe let you kind of get back to that and how you started to develop some of your mechanisms for trend following or timing.
Well, I worked on all kinds of schemes that I read about, and I say that the average person could learn how to time the market if they worked at it. And well, I'll give you an example of what I was doing. I would go into the boardroom at Merrill Lynch during my lunch hour just to see what was going on. And I was all new at this stuff. And there was a young man sitting there, and I would talk to him once in a while, and he said to me one day, "Jim, do you know what the first lesson in investing is?" I said, "What's that?" I said, "I'm new at this game." He said, "Taking a loss." I said, "Oh, I've taken losses." He said, "I don't mean that, Jim. Everybody takes losses. But can you deliberately take a loss? Have a planned strategy for taking a loss. If you don't know how to take a loss, you're never going to be successful." That stuck in my squash. And I said, I think the guy is right. If you're going to be successful, you can't take big losses. But how do you do that? And I worked on that idea for quite a while, and I heard about stop losses. I don't know if you ever read the book by Nicholas Darvis. He talked about using stop losses, and a lot of brokers got mad at him, I think, because everybody wanted to do stop losses. Well, they're okay, but they also can whipsaw you. So I found that I didn't want to do that. Eventually, I started looking at some indicators of the market and applying mathematics to them. I'm not going to tell anybody what those indicators are, but I can, using my mathematical formula, I can tell on a daily basis what the trend of the market is. In other words, I call a RIX index that measures the action of the market every day and converts that action into a number that represents the trend for that day. It took me a long time to realize that it was working. In fact, I worked on it for 7 years. At the end of 7 years, I said, this thing's working. I think that was in 1984, something like that.
Let me add something to that about your RIX index, Jim. You know, I'm not a regular follower, but I have noticed, and I do receive your signals will come across my desk, and I have noticed, just kind of a cursory keeping track, not paying huge amounts of attention, but you know, you're not picking bottoms and you're not calling tops, but you definitely, there's no doubt about it that when I see how your signals come out, you are keeping people on the right side of the long trend in equities and then keeping them out of the market when the market starts to go downward, at least in equities.
Well, that's right. I can't tell the top or the bottom, and neither can anybody else. In order for me to get a signal one way or the other, the market has to be moving in a direction for a while. Like when it hits the top, it has to go down for a while before I get my signal. I never ignore a signal. I've learned that over the years. And I've also learned that it can be a very relaxing experience if you depend on a strategy that you have confidence in, a strategy that will take you out early and put you in early on a major move. The only drawback to this whole thing is we never know how long the signal is going to last. Like right now, I got a sell signal last Wednesday. I think it was the 9th. And this thing is sinking. Prior to that, I had a beautiful buy signal I think it was the 22nd, 23rd of December, and we rode that for about an 8-9% gain in the S&P 500. But if the market keeps going up, my strategy will keep me in. And that's very important. If you take an Apple, for example, that seems to keep going up. It has pullbacks, but it keeps going up. And if you're one of the people who says, gee, I bought Apple and I got a 20% gain, I'm taking it, I'm getting out. Well, maybe that's not a good move. Maybe you need to have something that keeps you in the market. And if you can do that and you have an indicator that keeps you in the individual stock, and I like to talk about a 918 crossover. I don't know if I talked to you about that before, but if you have an index like mine that gives you the trend of the market, and you have another indicator for individual stocks, like Apple, I'll keep talking about Apple because it just keeps going, that keeps you in Apple, you have the best of both worlds. You have an indicator that says the market is going up, and then you have the second one, a 918 crossover. I can talk about that if you want. That tells you what the stock is doing. Now, if I got a buy signal in the market and I bought Apple, and then I got a sell signal, and I looked at my 918 crossover, and I saw that Apple was still going up, even though my market indicator said the trend of the market is going down, I might stay in Apple until it also showed a negative sign. Understand?
Yep.
It's a beautiful combination of tools. I don't know what you use.
Let me take you back, because I'm gonna bring you back. I think I want to go over some things with you that are a little more basic and that maybe touch on some of the problems that investors have. And let's just go big picture for a second, because you have seen a full adult career of the mutual fund industry grow, start, get big, all these big names, Peter Lynch and all these guys. You've seen it all, okay? And you and I definitely share a fond view that buy and hold is dead. However, Jim, I still think we're in the minority, because I think a lot of people just don't want to accept it's dead, and they want to just maybe hope, well, maybe the Greenspan, Bernanke guys, they could have saved it for me, and they still just hang on. Talk to me, Jim, from your perspective. Buy and hold is dead. I mean, help the average guy out there before we even get into technical analysis about buy and hold, the negatives, everything.
Well, I'll tell you, the other day, maybe a week or two ago, Becky Quick on CNBC said, the market can't be timed. Isn't that a terrible thing to say when we know that some people can time the market? There are very few. You know, I subscribe to, and I'm tracked by Timer Digest. I don't know if you are. They track over 100 timers, and I look at what the timers are saying, and I must say that there aren't too many that I would want to follow. But having said that, why should the average person believe it can be done? Well, if they listen to the professionals who say it can't be done, maybe it's the professionals who can't do it. Now, I spoke at a university here in Orlando. I was asked to judge a contest of 4 or 5 universities, and they had to produce results on a particular company. And I started to ask technical questions, and then the professor came up to me afterwards. He said, we're teaching these people to use only fundamental analysis. We told them not to use technical analysis. And then I said to myself, whoa, why aren't they asking the kids to do some technical analysis? I think you know the answer. Because they don't teach it. If you don't teach it, you can't ask kids to use it because you can't grade it. And that is one of the reasons why I think they keep telling people you can't do technical analysis. You can't time the market.
I think you make a good point because I really don't know. I'm sure somewhere buried in some finance textbook they might mention technical analysis, but you're dead on right. It's it's the efficient market theories. It's CAPM. It's P ratios. It's all this kind of stuff. And the idea that you could put all that aside and just look at price as the variable for your decision making, it's just not taught.
It is not taught, and all I look at really is price. I know volume is important. Mark Leibovitz, I don't know if you know him. He's the guy that I would listen to. He uses volume reversals as his technical indicator, and he's good. The guy's good, but I can't keep up with the volume. You have to be really studying that stuff for a long time, but it's good.
Let's swing it back though. I want you to get back at buy and hold and really really, because you've got some good wisdom on there, and there's so many people that have been left holding the bag. And I think maybe they think, well, I've already lost 10 or 15 years. I might as well stick with it. Talk to those people about if they keep with that kind of thinking, I'll just stick with a losing strategy. What can happen to them?
Okay. Well, let's talk about, what happened in '08, okay? They stuck with that buy and hold strategy. And it really irks me that, and I've talked to quite a few of them, and they said to me, well, I saw it going down, but I call my broker and I'd say, what should I do? And he would say, stay with it. It's going to come back. Just relax. Everything's going to be okay. And they wrote it down to a point where they lost half of their life savings because they had no other alternative. They were told that you can't time the market. And then the psychology enters in here of the individual who says, well, it's down 15%, we'll say. If I sell it today, it's going to go back up and I'll miss the up move. So people get these ideas in their heads that as soon as they do something, the opposite will happen. And so they ride it a little. I'll ride it one more day. I'll ride it another week. And now it's really down. Now it's down 50%. And they say to themselves, some of them, I better get out. I can't stand to lose my entire life savings. I'm saying this to you, Michael, and to the people listening. Don't get yourself in that predicament again. It could happen, but you need to know some way of getting out of the market when it's going down. And don't rely on your emotions to say that if I get out today, it'll go back up tomorrow, so I might as well stay in. It's a fallacy. When you reach a certain point in your losses, fortunately, I have a good technical indicator that tells me precisely when to get out. But if you don't have that, you've got to get something in your head that says, well, I've lost, pick a number, I don't care, 10% of my life savings, I better get out. And get out. Yeah. You're left with a dilemma of when you get back in. But, even a crossover is good, Michael. If people used, I don't know if they've heard of it, nobody tells them about it. But if you use like a 15, 30-day crossover, let me explain what that is. It's two moving averages plotted against your stock. So you have a 15-day moving average and a 30-day moving average. I like to use exponential moving averages because they place more emphasis on what's happening right now. But you plot these two indexes, and you can see them on your chart. When the 15-day moving averages crosses up over the 30-day, it's a buy signal, not to be ignored. And then if you stay with it long enough, the 15-day will cross down over the 30-day moving average. It's a sell signal. Do not ignore it. This is a good way to time your investments. Not as good for the overall market, but it would be better than nothing. I would like to have people follow me, but You know, I speak at money shows, Michael, and I've been doing it for 10 years. And I decided, say 10 years ago, I make a lot of money trading the market. That's where my revenue is. But at some point in time, I said, you know, I'm going to share what I do with other people to help them. Yes, I do get a small pay for that, but that's really not why I'm doing it. I want to try to help these people. Well, I gave my talks, and I could not believe that I got very little response from people. I think, as you said, they're so ingrained in the idea that you have to buy and hold and you can't time the market that they don't want to hear guys like me. It's a little frustrating. And then we get this little message. I think you got it from this guy who said when he heard that we were going to do this little, what do you call it?
Podcast.
Podcast. He said it was so good to have Jim Rohrbach and MICHAEL COVEL together. They have helped me so much in my life. The only one that helped me more was my father. You know, that's better than pay, Michael.
There you go.
That's why I'm here.
Seriously, I noticed on one of your most recent newsletters, you had from the master marketer himself, you had a comment from Zig Ziglar, and it said, quote, "You can have whatever you want, but if you help enough people, you can have whatever you want if you help enough people get what they want."
Absolutely.
Let me bring something back though. We were talking about and the devil's advocate to the guy that's sitting out there, and I think the current equity market activity in U.S. indices bears this out. But if we look at, the equity indices bottom out in early 2009, and from a buy and hold perspective, a lot of people are probably saying, well, hey, Coveil, hey, Rohrbach, buy and hold actually worked because I just stayed in it the whole time. And now we're back up to, 12,000 or so on the Dow. And, but I guess my retort, I'm curious what your retort is. My retort will be, okay, well, what happens if it goes down and doesn't come back? I mean,
no, I don't even subscribe to that. Just because it came back and we have hindsight to see it doesn't mean it was a good thing to do. When mom and pop were sitting at the table looking at their portfolio that came out every week or month and saw it dropping from, let's just use a number, $100,000 down to $50,000, a 50% drop. Do you realize, I can't, but can anyone realize the amount of stress that these people went through just to prove a point that you can ride it out? I say no. And I say to the young people, and I'm interested in two groups of people, young people getting started and old people trying to survive. I'll say to all of those people, don't ride it out the next time. Wasn't that lesson enough that it's wrong to do that? And don't listen to people say it'll be okay, it'll come back. If you can find some way to avoid riding out the big drop, and I think one's coming, Michael, use it.
Well, there's a point that you're making here, I think, that you kind of obviously corrected me on as I was putting my foot in my mouth, but I think the idea of process versus outcome. And what you're saying is, hey, hold on, have your buy and sell process in place. But in hindsight, okay, the Dow bounced back, the Fed did all kinds of stuff and it bounced back. In hindsight, that looks great. The outcome was frankly lucky, but it was a bad process, is I think what you're saying. So you need a good process, but if you have a bad process, just if you get a lucky outcome, that's not good either.
It's not good. No, and that's all people are left with. They're not given. I know you're working at this problem, but they're not given strategies. They're not told how to do it. They're not even given suggestions about how to tackle this problem of knowing when to get in and when to get out. I try. I think this crossover thing is better than nothing, and it's a lot better than nothing. But
Jim, let me throw something at it. You've got a lot of wisdom. just by the you've had more experience on this planet than a lot of us. So what do you think is the psychological reason that people can't break away? Like what is wrong right now in society where there's instead of having this Zen-like approach that you're describing, which is like, hey, I kind of enjoy the process and you're getting a good night's sleep every night, but then everybody else is stressed out. What is going on that we can't think clearly? What's happening?
Well, it's happening everywhere. One of the things that drives people the wrong way is their own idea that they can't do it, that they need to get a professional, a well-trained professional, and then some of them even enjoy turning it over to the professional and let him run for me without monitoring it or anything. And
Jim, when you say professional, you mean like, for example, the brokerage firms that would have all gone bust in the fall of '08 if they weren't bailed out? Those are the professionals you're talking about? Okay. Just want to check.
Yeah, they're not too smart. I mean, let me give you another example of not too smart. I was watching TV some time ago, and they were talking about this man who was a flight engineer or navigator on the plane that dropped a bomb in Japan, all right, in Enola Gay. And he was going to a school to speak. And he gets to the school, and the person introduced him as a veteran of a veteran of World War 11. Wasn't that a Roman numeral 2? Are we that far gone in our educational system that we don't know a Roman numeral 2 from an 11?
Maybe you've just answered my question about what's wrong with society with that little example. Huh? Maybe you just hit the nail on the head right there.
Yeah.
Is it? I mean, maybe that's really it. I mean, for me, it seems like we've got this society that everybody imagines themselves being the wealth of George Soros or Mark Zuckerberg or Bill Gates, and everyone thinks they deserve it, and everyone thinks it's going to happen. And so I don't know. There's this crazy desire to get rich, which is great. Getting rich is great, but it's like nobody puts the time in to figure it out.
Well, you said it the other day that if you're going to be a market time or you call it trend follower, you got to work at it. It's not something that's easy. Don't expect that somebody's going to give you the key to the door and you can walk right through. I have a whole series of books on my desk here that I've read, and I've got a little bit of knowledge out of each one, but I work at it. And the other thing I said to my wife today, I wonder if our problem is a lack of knowledge and a slipping of education on the part of our teachers. Are our teachers getting dumber? And if that's the situation, then how can we expect our children to get brighter? I don't know if it's true. I have no way of measuring it. I don't know if anybody's measuring it.